Hi, this is Sai Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexpsummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpsummit.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again on euro currency. So it seems that our journey with the upward retracement that we're standing in within the last week is over, and now we need to take a look at the opposite direction. So in general, if you remember our talk on euro currency last week, we said that on a weekly chart, market shows really strong bearish momentum. So it was reversals week, which engulfs the three previous week, almost the month. And sooner or later, but it should show the downward continuation. It should trigger downward action. And it seems that time has come for this action. In general, if you're interested with our longer-term view, although it was not strongly impacted this week, you could read the weekly report and monthly and weekly analysis, which put the foundation for a price action within the few weeks. So currently, in two words speaking, we do not exclude the chance that the reversal October action will be destroyed and will be erased by the current downward action. So now a chance for that exists, because those of you who are following us for a considerable period of time already, you probably know that we have currently two major driving factors, and one of them is the balance between the European and United States economy. And the situation stands so that euro currency United States dollar balance totally depends on the situation in the United States, because in the European Union the economy is already grounded, because real anemic pace of the growth, interest rates already stands at the 0 point, and all that the European Central Bank could do is just to launch next quantitative easing program. That's all. That's why euro currency currently is very sensitive to the changes in the situation and the statistics in the United States economy. And if you will see at the statistics, take a look at the statistics on the recent few weeks, you will see that the retail sales, non-farm payrolls, PMI index in the last week was relatively positive. Some improvement exists. So it indicates that some stabilization right now in the United States economy. So that's why the Fed takes the pause in the rate cut, and that provides support to the United States dollar. And the result of that you already see in the chart. Within the recent 3 weeks, market mostly stands in the downward direction, and the dollar is rising. Second driving factor, which is the United States-China negotiations, we think that it mostly used in favor of the big speculators, because to be honest, guys, and everybody understand that, we do not have real results of this factor. So all that we see is just inform agencies shake the boat with the publishing day by day that today the Chinese side says one thing, next day Trump says another thing, and that is continuing day by day. So the market just moving up or downward, up or downward. So that is just volatility, and that is needed to big speculators to shake the market. They need the volatility. For us, this is really discomfort, because we have to take into consideration this volatility and place far stops, more extended stops on the. But this driving factor mostly is discredit itself, just because it brings no real information. So that's just brief talks on the fundamental that we have in the current week. So if you would like to know more, just read our fundamental part of the research. Now let's take a look at the trading. So what trades we could get on the next week? First of all, recall that we talked about the possible Brent bottom setup that we have on the daily chart. And this Brent bottom setup mostly is completed. So last week we considered this drop as the thrust retracement where we could take the short position. Now you can see the market hits the 618 support and has broken through it, of this recent leg. So theoretically, this brand body is done, at least it hits minor target. But if we'll take a look at this price action in the context of the weekly situation, the brand body and overall downward action could be just starting point for the deeper action. Since we do not know how strong downward continuation will be, because we know that the reversal week should trigger downward continuation, but we do not know what the depth of this continuation will be, whether this will be just COP or it will be OP right around 109. Currently we can't say that. That's why we consider at the nearest standing target, and it stands at 109.80 area, which is the COP. It agrees with the same 618 support, 109.93, and take a look. It stands above the oversold area, so this really could be reached in the nearest time. Also, we suggest that here some slippage could be, just because you can see the COP stands below the B point. And as you understand here, we have some stops have been placed by the traders. Even we initially placed the stops here when we just have planned the trade here last week. But some traders who trade on the more extended time frames, they still keep stops below it. And once it will be triggered by the COP reaching, market could slip slightly lower, so its target could be exceeded. But in general, that could be somewhere in an area of 109.70, I suppose, 109.90. Here, this market could reach the target. We do not consider currently the OP because it stands too deep below the oversold, and it's not really interesting for us now. So let's focus on this target. So here on the daily chart, we estimate the possible target that we will follow. Now, on hourly chart, how we could trade this? Here's our hand and shoulders pattern that we discussed on Friday. You can see it's done very nice. But market already hits the XOP. So if you're taking the short position, you could think about booking the profit totally at some degree. So we have the bearish context, so it's not necessary to close totally the position. Just tight your stop somewhere above the confidence resistance. And maybe you could grab the half of the profit here and keep the rest half of the position for downward continuation. Those of you who do not have shorts and would like to take the short position, you need to consider two levels. First one is 1034, is nearest fib level. Next one is the same confidence, 1045 area. These two levels are suitable for taking the short position. We think that retracement hardly will increase and break these levels because we are not at oversold, and the downward action is just has started. Besides, market already has broken the major 618 support here. That's why retracement could be really small, right to the 1034. We do not exclude this way as well. It means that the most easy way to trade this will be to split your position in two parts and take it gradually depending on the market where market will reverse. So for example, in the first leg you take the half of the position at 1033. If market going higher, forming some kind of ABCD maybe, you could take the second half at 1045, 1046, placing stop above the confluence. In this case, you will have the position somewhere in this area, so where it's very good position will be. Because we are not exclude the chance that market could turn down immediately right from this area. So that's our trading plan for the beginning of the week. That's the way what we will keep an eye on your accounts. The target, as we said, is approximately 1090, but 109.90 area, but we could get the slippage somewhere to the 109.70. So potential of this trade is really not bad. It's approximately 50 pips maybe. And then we will see what will happen next, because we need to see the reaction of the market at this support, what will happen here. So that's our short-term view. Let's see how it will be realized on the market.